right, welcome to the first episode of the Jack of All Trades podcast. I'm David, and my co-host here is Kaylin, and our producer is Sam. I think I want to start off by saying how this kind of thing started. I think Sam called me a few weeks ago and started giving me the idea of maybe starting a podcast with another guy about trading, and so we started with that first, and I thought it'd be good to get like a third voice in here, which is Kaylin's, because Kaylin's a day trader, and I'm an investor, and that third guy was more of an options guy. But Sam ran the idea to that guy that we both know, and he didn't seem that interested, so which was fine because at that point me and Kaylin we were like gung ho about this thing. So I think the ball was already rolling. Anyway, let's get started with Kaylin. So you're a day trader.
Yeah, just I've been trading now for roughly 4 years, and I just do I still have a full-time job and everything, so I just day trade part-time. So originally, I know we started talking, I don't know, maybe a month or so ago, just about trading and stuff all the time, because David and I first met because I was doing one of my bodybuilding photo shoots, and it was right at the beginning of the year. I just done a 20-week prep, and then my show got canceled 2 days out. So I called the owner of the gym that I go to, and he kind of hooked me up with David. So that's how we ended up meeting. And then I started seeing all his posts about trading and stuff in the Instagram. So I started messaging him. We just kind of started bouncing ideas back and forth. So when he asked me to do the podcast, I was like, absolutely. That's just pretty much what we're always talking about anyways.
I think that's how I thought the name was pretty appropriate for us, because originally it was Jacks of All Trades, right? But
then I figured we're just a couple of meatheads, so
Jacks of All Trades. But the reason was because we both of us, we seem to wear a bunch of different hats. You have 2 different jobs you do, right?
Mm-hmm. Well, there's just a lot of similarities, right? I mean, remember even when I was in, I've been in a couple chat services and stuff like that, and guys in those services used to even tell me, they're like, man, if you're a bodybuilder, you're going to be a great trader, because it takes the same kind of level of discipline and stuff. So that's why I think there's just kind of a lot of correlations between the two. We just thought the name was kind of appropriate. So
yeah, I think that's a good point. I mean, if you could stick to a diet, you could probably stick to some stops and so not cave.
Yeah,
less likely to cave, right?
Yeah, you probably just don't want to do both at the same time.
yeah. But guys, when we started talking about trading, because I started posting a lot about it in my stories, and it was just I can't remember why I started doing it. I just wanted to share something different. But after a while, I started getting a lot of questions from my friends who wanted to get into trading and whatnot, and I started to realize that there's a lot of common questions they may have. And I thought this would be, why not start a platform where we could just answer it for them, because we both know there's a lot of bullshit, there's a lot of scams out there, and for the 2 guys that kind of learned it on their own, we're probably going to be way more relatable, way more honest about trading and investing.
Yeah. That's kind of why I like the idea of doing it where we're both at now, because I'm not doing it full time, but I can still make money doing it and everything like that, and I haven't been doing it for 20 years, and I just found as helpful as a lot of the services and stuff are out there, if you actually find the good ones, it's like the fitness industry. There's so many scam artists out there where it's use these 2 easy steps and you're going to make $10,000 a week, or you don't need to do cardio to lose weight, just take this pill and eat these 3 foods, and it's there's so much of that stuff out there. So I just thought that I'm at a point now where I'm kind of still in the learning process to a really good degree. So a lot of the stuff that some of the higher end guys might kind of breeze over and not really think is important. I remember watching their videos and thinking what's he talking about, or I missed that, and everybody else was kind of seeming to know what he already talked about, but there was just I still kind of knew the basics of what I was doing, but I just felt there was a lot of stuff that was just kind of being breezed over that I would have liked to know 2 years ago. So I'm kind of at a point where I want to try and help other people out, not breeze over that stuff, and hopefully help people kind of find their own way and be self-sufficient.
Yeah, and I thought this was actually a really interesting time for the both of us to be starting the podcast with this conversation, because you're just now getting into investing.
Yeah,
and I'm getting more into day trading.
I literally started long-term investing as of a month ago, and you just started day trading as of a month ago. So
yeah, exactly. I mean, I've been investing for 8 years now,
right.
But I didn't start day trading until 3.5 years ago.
Okay.
That was because of the first crypto craze, 2017 Yeah, the crypto craze. So I'm like, you kind of have to day trade that stuff. So, but it's helped like getting into day trading, having to learn the technicals. Because like for the first 5, 6 of the 8 years, I didn't know squat about the technicals. Like I was just fundamental analysis, do my research, but I didn't know how to identify like what price points to buy, what prices to sell.
Right.
So, but getting into day trading like helped me, like kind of pushed me to learn the technicals and stuff, and it's really helped me with my entries and exits.
Yeah, like just for people that don't know, like technical analysis is like chart patterns. Like, so you're not too focused on the company. You're just looking at the actual chart and figuring out like where your good entries and exits are going to be. And then fundamental analysis is the company side of things. So you're looking at, you know, balance sheets, the company's profitability, like all that, like, you know, the Warren Buffett kind of stuff, if you want to say it like that, just like how the company actually functions. So like if you combining the two of them, like day trading leans way more towards technicals because things are just happening so fast that you're, you know, I don't really care too much about what the company's doing. I just look at the chart pattern. And then like, you know, if you're looking at investing over a decade, then, you know, technicals are a lot less important. But if you're doing kind of interim stuff like swing trading, which is, you know, anywhere from a couple days to a couple weeks to a couple months on a trade, then you really want to try and kind of combine both of those so you can make sure you're getting really good entries, you have good risk, so you're not, you know, risking too much of your money, and you know where you want to sell as well. So that's kind of why like the two of us are hoping that we can kind of come together and make the best of both worlds.
Yeah, and that's actually one of the reasons I originally wanted to start the podcast, because I'm not sure if this is true or not, but I find like people conflate trading, day trading, or trading with investing, and they're not the same thing at all.
Yeah.
Right.
Like I always laugh because like, you know, my dad, for example, he's a big investor. Like he does, like he thinks everything I do is gambling basically, but like you know, I'll make a trade or something like that, and I'll send him one of my charts. He goes, "Oh, what's the company?" I'll say, "Oh, I'm not sure. Let me check." You know, I don't even know what the name of the company is, right? Because it doesn't matter.
What do they do? Don't care.
What do they do? No idea. Like, you know,
like, do you see this big red candle?
Yeah,
like that's why I'm in it.
Sometimes it does matter, but I mean, most of the time it really isn't too much of an issue. You know, you just really quick look at the news, and if there's nothing detrimental, then just play the price action, which is basically layman's terms for saying play. You know, if there's a lot of volume, a lot of people are looking at it, and the stock's moving around, then it really doesn't matter. You know what the company's going to do. You know what their long-term business plan is, because I'm only worried about what's happening in the next 20 minutes.
Yeah. So. And I want to ask you though, would you agree that for anybody that's starting out, like clean slate, it's better to choose one or the other just to get a handle on it before switching?
Yeah, 100%. I think like one of the biggest mistakes that even I made at the start is, and I think a lot of people make this, is just trying to do like way too many things at once. So like, especially like I mean, you can touch on the investing side of thing, but I know as far as like day trading goes, you know, like I can set up a scanner in the morning and, you know, 9:30 or whatever, and I'll have 50 stocks on a really good day that are up over 15-20% in the morning. So like, that's a lot of stuff that's moving, right? So if you're trying to do everything at once and you're trying to look at a million different things, like you're never going to be able to learn one pattern. But it's tough because, you know, you're excited and you want to make money and you're looking at all these different things happening, and you don't want to miss a play. And then you'll look back and you'll see this thing that just, you know, skyrocketed 500%. And you're upset because you missed it, but it might not be like a very good setup, right? So it's just about like my success really started to come when I just ignored everything else. Like I got out of all the chat rooms, I stopped listening to people on Twitter, and I just started looking at charts, and I would just find one specific chart and it would start moving, and I would say, okay, I'm just going to look at this one pattern for the next month, and I wouldn't touch anything else except for that one specific pattern until I nailed it. And then you move on to the next one, and then you move on to the next one, and that's how you kind of build your repertoire. But if you're trying to learn, you know, 5, 6, 7, 8, 9 things all at once, then I think it just becomes way too messy, and you can't you can't get great at one thing if you're trying to do a million things at once.
Yeah, I agree. I mean, when I first started trading crypto, I got balls deep in stuff like Ichimoku clouds, Elliott waves, like all these ridiculous chart indicators.
Right.
And I realized that when you have all of them on a chart, you don't really have any answers at all, because they might all be giving you different things.
Right.
And so I remember when I just got rid of all of that, my trading instantly started getting better. I'm just reading volume. I'm just reading RSI, maybe some candles, some traditional chart patterns. That's it.
Yeah, exactly. So RSI, just relative strength index, which is basically just Like, how would you describe that? Just kind of how overtraded a stock is to a certain degree, or?
Yeah, it's got a range. I think it's like 40 to 70. Any stock that's trading within that range, it's considered neutral. Anything over the 70 is considered overbought. Anything below 40 is considered oversold. So you're supposed to want to buy when things are oversold, and you're supposed to want to sell when things are overbought. I mean,
Right.
It doesn't necessarily work that way, but it's one of the many momentum indicators. It just kind of tells you where the momentum of the asset is going.
Right. So provided the stock obviously has a good technical setup, and the fundamentals are good, they haven't just filed for bankruptcy or something like that.
Yeah, that's the thing that I find like screws things up, because we were just talking about this company that you're looking at, INDS, right?
Yeah.
They're like the wheat company in California. You said they just took a giant nosedive, I think, early December.
Yeah.
Right, and I was saying like that's because Gavin Newsom, the governor, put them on lockdown again early December.
Right.
So, but by no fault at own of the stock, like it just tanked like, God, from $2.30 all the way to like a $1.20, like almost 50% dip.
Right, but that's not really something that's company related. So
no, not at all. So it's like, yeah. So that's why I think it's great to be able to get both sides, to kind of pay attention to the fundamental side, the news, and the balance sheet, and how the company's actually doing, and then also the charts.
Mm-hmm.
Right, because if you were just looking at this chart and you didn't know anything about the company, you were like, holy crap, a lot of people just sold off, like what's going on, right? It's kind of like, But for me, I would be like, well, if it was an overall thing where the governor shut the state down, and the asset dropped, then this is a buying opportunity, because by no fault at own of the company, they just dropped, right?
Right, exactly.
Right.
Yeah. So that's kind of the stuff that you want to look for as far as good entries and things like that go. Is you want to look for, a good spot to buy on the chart, but you still want to have good fundamentals, so you're not just getting wiped out.
Right. And by the way, I'd never asked, how did you get started in day trading? Was it because your dad was in investing and you just decided to kind of do the same? And
no, actually, I was honestly, I don't really have a specific like story per se, but like I graduated school for engineering, and then I started working for an engineering company, and I was a site inspector for like subdivisions and stuff like that. So like some days I was super busy, and like some days I just basically had to be on site in my car, watching guys, put catch basins in the ground or something, because it was required by the client. So I'd spend 10 hours a day just kind of sitting in my car, wandering around. Like there wasn't a whole heck of a lot to do. So I'd be like on my phone, like looking around, looking at like different ways to make money or something, like while I was there. And I remember I started following a couple of guys that were trading, and like when I've never done it before, I'm seeing these guys are like, oh, I made $20,000 today, or I made $50,000 today. And I'm looking at all these guys, I'm going like, oh, that sounds pretty enticing. So I started like doing a little bit more research into it, and then I ended up like opening a Questrade account at the time. And like, you're gonna laugh, but like when I first started trading, I was trying to day trade, and I literally, like, I didn't know anything. Like I had nobody to teach me. There was nobody I could really talk to about anything. So the way I started trading is like, I would literally sit there, and I had a Seeking Alpha app on my phone. I had the Questrade app on my phone. So I'd sit there, and I would scroll through news articles at like 8:00 in the morning. And like, if I saw a news article that like I thought was good, I didn't know anything about companies or news articles. Like I had zero knowledge. I'd look at it and be like, oh, this company had a $10 million merger deal. I'd be like, oh, that sounds pretty good. So I'd click on the company, and it would say they're up like 20% pre-market. And I'd be like, oh, okay, great. And then I'd wait for the open, and I would just, I would buy 500 shares or something right at the open, like not even looking at the chart or anything. Because I didn't even know how to look at charts. Like I didn't even know how to open them on my phone or anything. So I would just buy them, and then I would just like stare at my phone for 10 seconds looking at the numbers. And sometimes the numbers would like spike up, and I'd sell in like 15 seconds and make like $80 or something. And sometimes it would just crash, and I would sell, and I'd lose like $100 or something. So that was kind of how I started. And then I was like, okay, I feel like I'm missing something here. So I started, I bought a few of those like videos from guys that are, like they have their 10-hour videos on how to trade and what to look for, and, how to read SEC filings and company news and all this kind of stuff. And just kind of started doing my own research, joined like a few chat rooms, and just kind of tried to get a good handle on it. But I found it really tough because like when I first opened my first account, I think it was like a $3,000 account, and I needed to have, I think at the time in Questrade, I needed to have like 1,500 or something to keep the account open. So I ended up dropping below that within the first like month, and then I put a couple more $1,000 in it, and then it dropped back down again, put another couple thousand in. So like the first year I ended up going through probably like 10 grand or something just in losses because I didn't know what the hell I was doing. And then I was just going through all these chat rooms, and like I was kind of seeing, like it was just kind of giving me an idea of like how different people trade. Like, you know, there's some guys that like shorting first thing in the morning. There's some guys that like, you know, shorting these big parabolic moves. And like from what I was seeing, like all the guys that I was following on Twitter that were making like really big money, they all seemed to be like short sellers. Like that was like nobody was really buying stuff to go long. I didn't really see a lot of guys that were making a ton of money doing that. So I was like, okay, like I guess I need to short. Like that's the way you make money, right? So anybody that doesn't know what short selling is, it's basically like you're borrowing shares from your broker. So like let's say you have a Questrade account, and the stock is Apple, for example. I would borrow, say 100 shares from my broker, and then I would sell them to the market, and then I'm expecting the stock to go down so I can buy them back and then essentially give them back to the broker. So it's just the opposite of going long. Instead of buy low, sell high, you're selling high on shares you don't own, buying them back lower. And then depending on how available the shares are, you might have to pay a fee. So they might charge you, a cent or two a share or whatever. But we'll get into all that in more detail later on. But essentially I just started looking at going short, and I found a few patterns that I was kind of like narrowing in on and starting to get a little bit of a feel for it. But like most of them were on really like low float stocks, meaning like basically garbage companies that nobody hears about. They come out with some stupid press release, the stock spikes up, and then it crashes back down to nothing, and everything's over in a couple hours. But those seem to be the best plays and the ones that I was actually understanding. But with Questrade, I could never get any shares because they didn't have anything available. So it just drove me nuts because I could never actually do these plays that I was sort of understanding. So I like looked around, and I didn't have enough money to get a good broker. Like I looked at Centerpoint to try and get like shares to short and stuff, and I just didn't have enough money at the time. So I ended up kind of looking at plays to long and all this kind of stuff, and went through a few different services, and then I just kind of found myself spinning my wheels. So like after a while, I essentially just like shut off all the noise, and I was like, okay, I just need to figure out like what's going to work for me. Because at this point, I kind of understood how markets moved. I kind of knew where to find information. I knew generally what to look for. So I was like, okay, I think it's just, it's just a matter of finding specific setups that work for me. And then that's when I really started to make like, a million spreadsheets. Like I literally have like hundreds of Excel spreadsheets on my computer tracking different patterns and companies and all kinds of stuff until I could really narrow in on plays that would work. And then like, if I found a play that was, that I knew it was going to work like 80% of the time under this specific criteria, and I knew that the reward was always like, say, 3-1 or 4-1 for reward to risk, then those were the kind of plays that I would look at. And then I just really narrowed in my focus and then just kind of branched off from there. But, there's like working full time and trading, there's a lot of restrictions because like I can't sit at my computer all day, obviously. So I kind of have to find things that are at like specific times a day when I know I have slow times at work and I can pop on the computer for a second, or stuff I can do like overnight, like stuff that I could buy at the close and sell at a gap up or things like that. So there's a lot of restrictions that I was trying to work around, which made it like trickier. But like the biggest progress for me came when I just basically I'd gotten all the general knowledge, and then I just shut all that off and just didn't listen to anybody. People, if I saw someone post like, oh, this stock's flying, like check this out, I wouldn't even look at it because like I don't care. I have my couple I'm looking at, and that's all I'm worried about.
Yeah.
And that's when I really started to get a lot better. So
yeah, I think shutting down out the noise is like huge. Because like I never started with the chat rooms. I always had like a bad impression of how the chat rooms are. I thought a lot of them were like pump and dumps. They're just trying to get a bunch of guys to buy up a stock and then dump it, and just it was kind of like a pyramid. Like whoever got out first made money, and everybody else got scammed.
yeah.
So that's why I never got into the chat room. So when I started investing, I was like, let me just shut everything off and let me form my own opinion. And then when I'm feeling solid about my own opinion, let me compare it to what the major news outlets or the analysts are saying, and let's see what the differences are. I think that's why I got into investing first, because it was a lot slower. Because like what you just described was like a a really hectic day for me, right? So I like to just like sit back, stew on some ideas and some research, and whether it takes me a day or a week to decide, it really doesn't matter. Like timing's not a big deal at all. So like that's what I like to do. That's why I got into investing. I don't know if I told you, but it was like back in I used to be a manager at Brinks, the armored truck company. And then so they had, that one of those programs where it's like if you contribute $1 to your mutual fund or whatever, they'll match the dollar. So I was there for a few years. When I left, I had like just under 7,000, just over 7,000 with them. And I was looking at the performance. It was just dog shit. It was like one year be up 1%, the next year be down 2%. And this was a high risk fund too, right? So I'm like, what kind of freaking gains are these, right? So I was like, when I left, they're like, "You want to take this money with you?" I'm like, "Fuck yeah!" I'm like, if someone's gonna lose my money, it's gonna be me, not you. It's gonna be me, right? So I could do this just as well. So I opened up a TD RSP account. So that's a registered savings plan account, but we could trade stocks in it. So I have 100% control in it. So I opened that up and I just started investing. First thing I dumped my money into was Apple. Because I can't remember how I got onto this book, but I got Warren Buffett's biography. It's called The Snowball, and that was like the foundation for everything that I learned in terms of investing early on. And basically, his main point in that book was like everybody has what he calls a circle of competence. But it doesn't matter who you are, what your education level is. There's something that's going to be more than somebody else, whether it's from profession or just interest, whatever, right? And I was just a tech guy, so I knew tech. So I was like, let's invest in Apple because I still see them at the time. They're still like the leader in smartphones, right? Android wasn't that popular, so I'm like, let's put some money in there. And then my first 3 stocks was Apple, Tesla, and Facebook. And I only got in on Facebook because they just IPO'd. Okay. And I remember the IPO at $25. They dropped to like $12 within a month. And I freaked out and I sold. So this was a very important lesson to me, though. I'll pay that loss every time to learn that kind of lesson. Basically, there's a thing called a lockup period. When companies IPO, there's a period where the original investors cannot sell their shares, and you have to find out when that lockup period was. So right when their shares tanked from 25 to 12 was when the lockup was over. Like all the original investors, like, we're dumping it. Right. So I didn't know that. So it was an important lesson to learn. So all you guys out there thinking of investing in like Snowflake or like, no, Airbnb was the new ones, DoorDash and Airbnb. There's a lockup period that those stocks are going to tank very, very soon. So yeah, that was like one of the big lessons I learned. So that's basically how I got started. I remember I was putting in like $2,000 a year every year for the first 3 years. So I put in about 14,000 total between 2012 and 2016, I think.
Okay.
But by the time I got to 2016, I'd already was making, I think I'd 250% the account. So almost 2.5x the account. I was like, well, at this point, I didn't want to put any more money into it that I didn't have to, because like I just started my photography business and everything. So every dollar counted. Mm-hmm. And I was like, at this point, if I could grow 2.5x, not knowing that much, like maybe I could just continue on refining my technique and doing that. So, and yeah, so basically for those that don't know, like the S&P 500 is like the benchmark, top 500 companies in the world performing, and they grow at annual rate of 7 to 10%. This has been true for like the last 30 years. So it's a benchmark for all fund managers, traders to kind of like compare their performance to. And since 2012 to 2018, I've been able to beat the S&P every year. So that for me was like saying either I'm really stupid lucky, which may be true, or I was doing something right.
Yeah, it's hard to get lucky for that many years in a row.
Well, that's what the hope is, right? That's what the hope was. So yeah,
it's interesting. Yeah, I think everybody has one of those like big loss stories that kind of shocks them into learning. I remember mine vividly. It was, I think it was still the first year I was trading. It was TOPS was the ticker, and it was like all the shipping companies. Like at that point, you guys can go back and look at the charts from 2016, 2017, or whatever it is. But it was TOPS, and I remember it was like 3 days in a row where I want to say it was around like 50 cents or something like that. and like it shot way up the first day. So, this was back when I was still just trading on my phone. I didn't have charts or anything. So I bought a whole bunch of shares the next day at the open because everyone was talking about it, and then like spiked up. I made like $100, sold it really quick. Next day did the same thing, spiked up, made like $80 or something, sold it really quick. I was like, oh, this is great. This thing's just going to go to $100. I'll just do this every day and I'll be set. And then the third day it had gone up. It had gone up from like 50 cents or whatever it was. And it was up to like $3. So it opened at $3. And like, I was just watching it right at the open. It was like 3. And then I saw the numbers. It was like 3, 323, 340. It was just spiking really fast. So I was like, oh, it's going to be another big move. So I bought like 300 shares at 350, which was the exact top. And then it just crashed like literally in probably about like 2 or 3 seconds. It went from 350 down to like, I don't know, like 240 or something like that. So I just lost all this money, and then I sold it. And like by the time it actually got me out of the thing, I was down like, I lost like $390 or something like that. And it just like, I was just like so devastated because I was so excited the past few days. I was making money every day, and then I just lost like 2.5 times that much in like literally 3 seconds. So that was like the wake up. I never forget that. It was only like $400, but like at the time I had I had no money in savings. Like I just barely had enough money in my trading account. And that's something that I'll always remember is the thing I learned from that is risk management. Make sure I always know how much I'm going to lose before I go into a trade. That's rule number 1.
Yeah, like it's not even the dollar value that you lost. It's more like the gut punch of like grinding it out for days and weeks to put that money together, then losing it in like one freaking step.
Second, yeah, because that's the time that was like 3 days pay, right? And I just lost 2 seconds. Like it was awful. So that's why my rule number 1 is always risk management. Like before I go into any trade, I know exactly how much money I'm going to lose because I know right where my cutoff point is. So if I'm not okay with that number, then I'll trade less shares.
So you said you traded with Questrade?
I did. So I use Interactive Brokers now. I have 2 accounts. So I have a Questrade account and I have Interactive Brokers. So I use Interactive Brokers for my day trading, and then I use Questrade for my like long-term investing and like swing trading and stuff like that. The reason is I just like to keep them separate. But the nice thing now about having 2 brokers is like I can get when I'm trying to short stuff, because I'm just getting a lot more into that now, is I can get more shares usually because I have 2 different brokers. But Interactive Brokers is great for day trading because they have the lowest commissions. So like they're only 1 cent a share. And realistically, like when if you're starting out learning how to trade, I mean, like, you're trying to make like $10 or $20 a trade. Like, that's good. Like as long as you're green, like, like when I first started started trying to be profitable, like, if I made $7, if I made $8, like I was happy, like, cause I was right. I had the right idea. But a lot of brokers are $5 or $10 minimum per trade. So, if you're just going into something, you don't know what you're doing, and you got a broker that's $10 in, $10 out every time you make a trade, you have to make $20 minimum, otherwise you're lost. So if you're going to go into a trade and you're going to say, okay, I'm going to risk $10 on this trade, you're actually risking $30 because you got to pay that commission, right? Whereas on Interactive Brokers, you can risk $10 and trade 100 shares, and it's only $1 in, $1 out because they charge you 1 cent per share.
Right. And there's these other platforms now like Robinhood and Wealthsimple. They're like free trading, right?
Yeah, I've never looked into those because I don't know, anything that's free, like it can't be that good of an interface. And I've seen people posting about how it's like oh, it froze or it keeps kicking me off. Like
well, that's my experience with TD.
Yeah, like it doesn't make sense to me to have a free broker and it's actually going to be good. So I don't mind paying a couple bucks a trade to have a good reputable platform.
Yeah, so I don't know how that works because I've actually been looking at. I kind of want to go to Interactive Brokers. I've only ever traded with TD, and it's just because all my accounts, everything's with them, so it's just easy to set up and move my money back and forth. But lately, I started to realize, like, because my account's pretty decent size now, and when I'm getting in and out of a position, it's not like TD. First of all, they charge the most for fees. I get dinged $10 every time I do a trade.
Yeah.
Right. But at this level, that's not the problem. The problem is they're skimming off the top in terms of conversion rates. So I never looked too closely until recently because I'm moving some bigger numbers, and they're eating about 3%. They're skimming 3% off every time. So every time I'm buying something Yeah, every time I buy something American, their convergence rate's about 30%. Every time I'm selling, it suddenly it's down to like 27 or 28. So they're always making that difference. And it's like, well, if I just made a 10% move on this trade and you're taking 3% of it on this fucking conversion, then it's like you just eat my lunch.
Yeah, that's no good.
Yeah, so I'm looking at going to
Yeah, you just gotta find whatever. Sorry, go ahead.
Yeah, no. That's why I was looking at international brokers. I was looking at Wealthsimple, Thinkorswim, and Interactive Brokers. And Thinkorswim, I don't think they're available in Canada, which is the only problem.
I think they used to be, but they're not anymore. Like the best ones that I hear for, like there's not really any spectacular brokers that I'm aware of. Anyways, I mean, if somebody knows one that's really good, then by all means let us know. But like Questrade Questrade is good for Canadian, but like I said, the fees are expensive. So I use that for swing trades. You know, if I'm trading a lot of shares and I'm swinging it over a couple of weeks or a month, or I'm just buying it for dividends and I'm going to hold it for the rest of my life, I'll use Questrade. But Interactive Brokers is the day trading one that I use. So like Interactive Brokers, Thinkorswim, and E-Trade, I think are the top three that I've heard the best things about. Okay. I've only used Interactive Brokers, but I know E-Trade is like really one of the top ones as well, just for simplicity and having shares available for shorting, low fees, all that kind of stuff that's another good one. But even on those, I think there's still some features that aren't available in Canada, because I know for Interactive Brokers, it kind of sucks because when you're trying to short a stock, like if it is a kind of like a junk stock, like a low float, meaning there's not a lot of shares available for trading, the broker will have a certain amount of shares. Like let's say that the stock has 10 million shares that are available for trading. The broker might have, say, Interactive Brokers might say have 200,000, for example, shares available to be used to short. So they'll go pretty quick. Like if there's a big play, like people wake up at 4 a.m. and they'll grab those shares really fast so that they have them to trade for the day. But if you want to get, if you still want some to find shares, then there's a spreadsheet that they have in the program where you can go through and they'll borrow them from other brokers. So Interactive Brokers can borrow shares from, like, say, E-Trade or Thinkorswim or whatever, but then you have to pay a fee for it. So like they might charge you 2 cents a share. So I could borrow 500 shares for 2 cents a share just to have them, but whether I use them or not, I still have to pay that fee. But that's not available in Canada. So unless there's the free shares available in Interactive Brokers, I can't get them to find me shares, which is kind of which is really inconvenient for trying to short stuff.
Yeah. See, what the reason they came on my radar was because so I have 2 trading accounts. It's a TSFA that I opened this year and the RSP account that I've had for like the last 8 years.
Yeah.
And I saw that Interactive Brokers had offered those accounts too, and it was like a small fee of like $100 or $200 to move the accounts over. So okay. that's why I was looking at them. But I don't know, I just don't feel comfortable moving that amount of money over from to a broker, from a banking institution to a broker. It's probably just all in my head, but it just, you know what I mean? It's a little bit of a barrier there.
Well, I mean, I know guys that have millions of dollars in their Interactive Brokers account.
Yeah, right. Okay,
they've been around forever, so I wouldn't be too concerned about it. But like anytime, like even when I open a new broker, like what I always do is I'll transfer like $100 in just to make sure everything's like linked up properly, and then I'll transfer the rest of it in. So like if you guys are trying to open, like anybody that's listening, if you're trying to open an account and like you're trying to think of just how to get going in trading, I would, like, if you're planning on investing or day trading, I think Interactive Brokers would probably be the best bet, just because it does have the cheapest fees, and like it's super easy to open. You literally just go on their website and you need your social insurance number and like your driver's license. They need a couple other pieces of ID, and then like you can have an account up and running in like 3 days. And then I'm not sure what the funding is because I opened mine so long ago, but it's usually like $2,000 or $3,000 I think that you got to put in it to be able to trade. But it just links to your bank account. So Interactive Brokers, I go on like the actual Interactive Brokers program and I have it linked to my bank account. So if I want to put money in or take money out, I do that through Interactive Brokers, and I can just, go down to the menu and hit fund account, and it'll say my bank account number, and it'll just pull it straight in. Whereas on Questrade, it's set up like a credit card. So if I want to put money into Questrade, then I go on my banking information, and it's like I have like, you know, Visa, American Express, Questrade, and then I can hit like pay bill, you know, however much money to fund it. So that's how Questrade works. It's not a direct link; it's more like a credit card. So
actually, I was going to ask that because I wanted to know how instant it was to move money from your bank account to like Interactive Brokers.
It's 3 business days usually. Some like I've had to do it the next day for whatever reason, but usually it's 3 business days. Like in or out.
In or out. So still a little bit of a delay.
Yeah. Yeah, it's pretty good.
But I should look into it. But see, the other thing that stopped me from looking into is have you used their phone app?
Interactive Brokers?
Yeah.
Not really. I mean, like if I have a trade on, like I'll go in there if like something catastrophic happens and I need to sell really quick. I'm not like I never ever trade from my phone. Like I always I won't trade unless I'm at a computer.
Yeah, because I do most of my stuff on my phone now, and I saw the reviews for Interactive Brokers, and it wasn't that good.
Oh yeah, they still have like the chart and everything. Like if you flip your phone sideways, like it'll show you the candlestick chart and everything. And
right.
It's easy enough to use. I mean, I haven't had any issues with it, but I don't have any experience with any other phone apps really, so I couldn't really speak on that.
So that's why I was looking at Wealthsimple, because apparently their app is one of the highest rated ones, and I saw the UI. It's like it's very nice looking, but then I asked around to a few friends of mine that use it, and they're very restrictive with what you could invest in. Like only certain stocks or certain markets. Yeah, I don't know why they have the weird restriction, but they're one of the ones that offers free trading.
Okay, so I'm curious about your TFSA though, because like maybe you can explain a little bit about that, because that you said there's no tax or anything on that though, right? Even though there's like higher fees. So that might be something like if people are looking at like long-term investing, I think that might be the best bet then, because you don't have to pay taxes on your profits.
Yeah, so for like the longest time, I was just trading my RSP account because that's where I had the most money and that's where I started with. And then the market crashed in March. So in April, I decided to open up a TSFA because I was like, well, I have a few $1,000s. Why don't I put some in there and do a little trading? Because I've known about it for a while. I've just been too lazy. Honestly, it's my fault. I've just been too lazy to open one up.
Yeah.
But it's basically a tax-free account. Like Canada's upping the amount that you could contribute next year to $6,000, but previously it was $5,000 a year. So basically, from the year that the program started, I can't remember what year it was, maybe 2013 or something like that. You could contribute. You have room to contribute $5,000 a year. So for us now, there's probably room for almost $70,000 to put in there at one time.
Okay.
And so let's say you put in the full 70 and you start trading for the next 12 months, right? And you get a 30% return on that. That's not taxed. You don't pay any capital gains tax. You don't pay anything.
So you can put that right into your bank account with no taxes.
Yeah, that's right.
Yeah, so that's really good for investing then.
Yeah, I think
they have it's $10 in, $10 out for any trade though, you said?
For TD.
Okay.
So I'm wondering if International or Interactive Brokers has a different fee set. The TD is just straight up $10 no matter what happens.
Yeah, but if it's Interactive Brokers, you have to pay for your profits though, right? Like I have to you have to pay taxes. Like Questrade and Interactive Brokers, you have to pay taxes on. But
on your but you have a margin account, right? Or regular trading account.
Yeah, I have a margin.
Right. So if you open up a TSFA, the rules are different.
Yeah, exactly. Yeah, but I just have a margin account because my I don't want to be paying those kind of commissions for day trading. So
yeah. True. Yeah. So like that's why I did the TSFA. I mean, I'm up like 60-something% for the year. I actually took some money out just before Christmas.
Mm-hmm.
But yeah, it's no tax, no nothing.
Yeah. So if you're thinking, like if anyone's thinking about buying like for dividend payments or just for like, something they're going to hold for 10, 20 years, and that would be the best bet because you can make, you could double your money. You don't have to pay any profits on it. You get your every 3 months or whatever, you get your dividend payments. You don't have to pay taxes on that either.
Yeah, they're just kind of restrictive with what you can play. Like you can't play with options. You can't short. It's just going long on stocks. Maybe some.
But you can play any stocks though, or they restrict you what you can trade.
Anything on TSX, or anything the Canadian market, the American market, I haven't had a problem with.
Okay.
I haven't tried OTC, but I know they list some OTC stuff too.
Oh really? I haven't looked at OTCs in years. I miss those, man. OTCs were so easy to play.
Scares the crap out of me, man.
Oh, they were so easy to play, man. Like I was making money on OTCs in my first like 2 months of trading, and then they just withered away and just kind of disappeared into nothing. I had to learn how to play all the listed stocks, and that's when I started losing money for 2.5 years.
I remember you mentioned to me like you've been trading for like 4 years, but you only started breaking even or making money this year. Was it?
Yeah, so I traded my first year. I probably lost about like maybe I don't know 8 to 10,000. My second year, I probably lost like maybe 2,000, 2,500. Going into my third year, I was break even for like 6 months, and then now I've been pretty profitable since then. So it's been like kind of I'm on the upswing now.
And you said the turning point was when you basically shut off all the chat rooms.
Yeah, exactly. The turning point for me was when I just kind of like focused on myself and stopped trying to learn what other people were doing and just figured out what worked for me. Because like, especially when it comes to day trading, like investing's one thing. I mean, you can have a good investment advisor, or just put your money in Apple or Microsoft. I mean, you're pretty safe. But like, whenever I heard about guys like, oh yeah, at the time I just bought a house, I got no money. Like, okay, so I'm gonna throw $3,000 into Apple and I'm gonna make, I don't know, $80 for the year. Like that's useless. Like that's a waste of time. So like, I'm like, I want $80 now. So that's why day trading was a lot more lucrative, because I'm looking at these guys making, 20% in 10 minutes, whereas guys that make 7% on the whole year think it's a great year if you're long-term investing. So it just kind of didn't really make sense to me at the time. I mean, granted, if I had like $100 million, then sure, I'll throw it into a long-term investment and just let it grow. That's pretty low stress, easy income. But for someone that doesn't have a lot of money, it doesn't really benefit you, right?
Yeah, that was the problem with investing when I first started. Like you're right, 7% is a good year. 7 to 10%, you're like, oh man, it's been a good year. The problem is like if you start with a couple $1,000s, like how many decades is it going to take for you to make them?
Yeah, it's a waste of money, right? It's just a waste of time. So like that's why I figured that would be a better option. But yeah, it's been it's definitely like a long road. Like I've read like I read a lot of books and stuff, and the ones that I like the most are like all the interview books. Like I read Momo Traders is a good one. It's I forget who wrote it, but it's about like a lot of guys like from nowadays that are like pretty successful day traders. And then there's another one I'm in the middle of reading right now. It's called Market Wizards, and it's basically like all the guys from like back in the 60s, 70s, and 80s, like all the big traders from them. And it's just like the way they're written, it's just like interviews, like, just asking questions. How'd you get started? Like the same kind of thing we're doing on this podcast for the first episode. And it's just really interesting. But like the pretty common theme for anybody who's like short-term trading, swing trading, day trading, like is from the 60s up until now is like the average time span for people to become consistently profitable is anywhere from like 2 to 4 years. And like some of the guys I've seen on there, like I remember reading about one guy who's worth like over 100 million or something now. And he said it took him 8 years before he started actually consistently making money. Like he was just losing constantly. He could never figure it out. And then finally something clicked and he got it. But like, that's kind of the hardest part is like you got to go into it realizing that like, the markets don't care about you. They're not going to be friendly. Like you're not going to make money. You might like I know buddies who, they bought something and they made $1,000 in a week and then they've never been able to make money since. Or, you hear stories of guys on Wall Street who made, $1.5 million in their first year of trading, and then they went bankrupt and they could never make another penny. And now they're, working at like Walmart or something like that. Like, it's a long road, and it's easily the hardest thing I've ever had to do, because it's such a mental, it just screws with your head so much, because the emotional highs and lows are like nothing that you'll ever experience. But once you can kind of get a handle on that and really focus in on your process, then it becomes a lot easier. But it's still like, I mean, it's still just like a game of odds. It's just educated gambling basically. And like even a lot of the patterns that I'll play now, like if like when I set up a spreadsheet for a pattern I'm tracking, let's say, I find a stock where it's like, okay, like 80% of the time under these parameters, like this thing is going to work for me and I'm going to make money on it. Well, the reality is I could play that pattern every single day for 3 weeks and it could not work every single time. And then it could work every single time for the next 6 weeks, right? It's not like I'm going to play it 8 times and make money and then I'm going to lose twice. And I'm going to play it 8 times and make money and then I'm going to lose twice. Like I could lose for a month straight and then I could make money for 3 months straight on that one pattern and not have a single loss. Like it's not that cut and dry. So like the hardest part is really trusting yourself once you find those patterns and believing that they are going to work even when things aren't going well. And if they aren't going well for a long enough period of time, then maybe the pattern's not working because the markets have changed, and then you got to adjust everything. So
yeah, I think the most common reason that people continuously lose money in the markets is that they freak out.
Mm-hmm.
Right? Because you're not you have to build a scab to like the emotional part of it, where you just don't care anymore, you don't feel it anymore, right? Where like if you see something that's tanking, if you're not that experienced, you might be inclined to sell. But then if you're really experienced, you're like, well, I've seen that before. I know where the supports are. When those break, maybe I'll freak out, but until it hits there, I'm just going to calm down, right? So a lot of people get out too early, and then don't stay in long enough. I think those are probably the two common reasons that people lose money trading.
Yeah. Like the biggest, like, I mean, I don't know what your kind of go-to rules are, but like for me, it's always like risk is number one. Like always know when to cut your losses. So like anytime I go into a trade, I know exactly, I know what the number is. So if it's, if I'm risking 10 cents on a position, then I'll figure out how many shares I'm going to use. Like, let's say, I want to risk $20 for argument's sake on this position. Like I'm not going to buy any more than 200 shares because I don't want to, if it goes down to here, then the trade's over and then I'll cut it for $20, but like I'm planning on making 100. Right. So like I can play that, 5 times and lose. And then if I play it, another couple times, then I'm going to make money. So it's just a matter of knowing when to cut, because as soon as, you can win and win and win and win like a couple bucks here and there over and over and over again, but then you get wiped right out by one big loss easily.
Well, we were just talking about that. I think it was yesterday, or maybe 2 days ago. I thought I was trading Bitcoin futures.
Yeah. What are you doing right now?
I'm looking at the chart. I'm like, this fucking thing looks overextended. Like it's got to pull back just a little. So I got into a short position. And then I remember I talked to you the day after. I'm like, I'm getting out, man. It's not looking good.
$5,000.
Yeah. I think that was just before it hit 29,000. Now it's up to like 33,000, almost 34,000. Like if I stayed in that position, I've been like, that would have been bad news.
Yeah, exactly.
Yeah. So I ended up taking like $120 loss on that position, but after it pulled back a little, I went long, and I actually end up making another $200 something. So it evened out a little. I don't feel so hurt anymore.
Yeah, as long as you're not trying to make it back. I've gotten burned a couple of times on that, where you have a loss and then you try and make it back immediately. And
well, for the guys that play poker, that's called going full tilt.
Oh yeah,
right.
Okay.
Yeah. Because I used to play a lot of poker, right? I think I told you this one time I played a 10-hour tournament. It was like it was a 14-hour tournament with 10,000 people. It was on PokerStars.
Wow. Yeah, I played poker.
I played I was well into the money, and then I had to go to work. So then I called my friend, and I was like, does your brother have school today? She's like, no. I'm like, take over my account, just fold every hand. I'm already in the money. Just longer that I survive, the more money I make, right? I'm going to work.
That's funny.
But yeah, it's called full tilt. It's like when you've had a few bad losses in a row, where you played everything to your mind, you played everything correctly. You made no mistakes, and luck just kicks you in the ass. Right. Sometimes you get too many of those in a row, and you just flip out. Suddenly you start going emotional, like all bets are off. You're not thinking anymore. It's just like, all right, if you're gonna fuck me here, I'm gonna double down. Let's go, right? So
yeah,
like
do that in the markets, and that's a quick way to go bankrupt.
That's exactly it. The markets are like cards. You don't know what's next. They don't really care. There's no emotion into it. It's just
It never makes sense. Like everything's always messy. It's never perfect. Like it's just a game of odds, really. If the odds are in your favor, then you go for it. If they're not, then you don't.
I don't know if you've ever heard of this guy named Peter Brandt.
No, I haven't actually.
He's an older gentleman. I follow him on Twitter. So he's known as one of the best traders of all time. Like not investors, like traders of all time. And he'll like post snippets of his thoughts and whatever on Twitter. And just like a few weeks ago, or like a week ago, he posted, he's like saying, most successful traders only need to win like 50% of the time, or even less.
Yeah.
Right. It's about managing. It's just about managing the dollar value of your losses.
Yeah.
Right. So it's
I'm like that. I probably only make money on like roughly 50% of my trades.
Yeah. But if you could do 60%, you're doing really good.
A lot more than I lose. So
yeah, that's exactly it. That's
like even in that book I'm reading right now, I was reading about one guy who's he's just got a ton of money, and he says he only wins like maybe 30 to 35 to 40% of the time. Yeah. But you cut your losses quick, and then when you get in a trade that's winning, you let it go forever, right? That's the way to do it. I mean, nobody really wins like 80% of the time. And the funny thing is, I've actually seen posts from guys who win like 80 to 90% of the time, but they're not profitable. Like they're losing money.
Really?
Overall. Yeah, because they're they'll make $100 a trade, but every time they have a loss, they'll lose $3,000. So like they'll make $100 a day for 3 weeks straight, and then they'll have a loss where they'll lose like $3,000 or $5,000, and then they'll win every single. So like the odds don't really matter. That's why like the number one key is just knowing when to cut your loss and let your winner go.
Yeah, that's the part I'm still learning. Like I've learned to cut my loss this past year, and ever since then I've started making money in the futures. Yeah. But what my biggest problem now is I don't let the winners ride.
Right.
I freak out. Every time there's just a hint of a pullback, I'm like, shit, it's turning around. Let's get out.
Yeah.
And as soon as I get out, it just.
I'll go through that maybe in the next one when we start looking at like some day trading patterns. Yeah. Just kind of like, because like once something starts going, you want to like you got to watch it and figure out like when it's going to turn. So like like a pullback it's a healthy thing for a stock to pull back and then go again. So there's indicators you can use to watch for that, and then know like. As it goes up, okay, it's here now. I can move my risk up to here, and then if it's here, now I can move my risk up to there, and then once that level breaks, that's when I know that the pattern's going to come back down. So that's like one of the biggest things to learn for letting the things go, and but still, I mean, like my patience is terrible too. If I'm if I see a really big fat green number on my screen, like I'm sitting there looking at it for too long, I'm like, I kind of just want that money,
Yeah, exactly, right. It's a weird psychological thing because it's like because there's realized and unrealized gains, right?
Yeah.
So when you see the money goes up, it's unrealized. It's just a number. But then you feel like as soon as it pulls back, you're like, I lost something. There's an emotional like I lost something.
Yeah, but you have.
You haven't.
You never had it in the first place.
Yeah, you never had it in the first place. You could turn around the next minute, then you really didn't lose anything. Like
that's like one of the toughest things I deal with is everybody wants to sell at the exact top penny, right? And just make the most out of it, because it sucks if you see this big number and then it comes back down and it kind of flutters away and then it's broken and you sell it and you're like, fuck, if I had sold 10 minutes ago, I would have made like another $200, but like now I'm down here, whatever. So that's one of the toughest things to try and get over is realizing that you're never going to hit the exact bottom and exact top. It's all about just getting like the main chunk of the move, and then you're in good shape.
Yeah, I think, and it's the same thing for investing too. Like, I do sell in and out of positions here and there, and it's almost never at the top or never at the bottom. But I'm like, after a while, I'm just like, I just want to take some risk off the table. Like, you know what I mean? Like, yeah,
that's saved me so many times. Like I'll go through this in the next episode, but like just like knowing like anytime like a perfect kind of setup for me is like if I'm going long on a position, I'll buy in. Let's say I'm risking 10 cents. And then if it goes up a certain amount, like, if it on that first pop, I always sell like a quarter of my position, because I know if it pops up that amount and I take off a quarter, then if it comes down and it hits my stop, now I'm out for zero. Like I'm out for break even. So that's always like my first goal is get that first pop and take enough off that I know if it does come down and it goes, past my entry point and hits my stop, then I'm out for zero. So I'm not losing money. And then after that, like once I know I'm not going to lose money on the position, makes it a lot more comfortable for me to let the rest of it go.
That's an interesting point.
Yeah,
I might have to apply that
a million times. Like I've had so many times where that's saved me from taking like because if that happens 3-4 days in a row, then I've just made 0 0 a couple like -3 $8 like basically zero all the way along. But then you get the one day where you win, and then it's great, as opposed to trying to hold that position for longer, and then it's like, okay, I lost $20, lost $20, lost 20. That starts to eat at you. So it's kind of like it's a nice little mental breather to be able to just get out of a trade for zero. And, instead of making $200 on the trade, maybe you're only making 150 because you don't have as many shares. But in the long run, it's a lot easier on my psychology.
So are you finding it a little difficult to get into investing right now? Because it's kind of a shift in pace?
Not like hugely. I mean, the stuff that I just put a whole bunch of money recently into like RBC and like, some of the banks and TELUS and stuff like that, just for like dividend payments. So like that's the kind of stuff I'm going to hold for, 20 years or whatever. So I don't really care about the price of the stock to a certain degree. But Yeah, as far as like, I'm just really skeptical because, like, I mean, like I said, I've really only started investing like as of a couple months ago. Started trying to learn how to do it properly, and like after seeing what happened in March, like there's people that are talking about there's going to be another crash, and other people are saying like no, it's just going to keep going, and we're kind of in this weird spot right now where like to me it's kind of weird that like the States has just put themselves in like way more debt. We have like higher unemployment than we ever have in like recent history, and the stock market is incredibly strong. Like it just like, I mean, I don't have as much knowledge as like the big time investor guys, but like just superficially to me that just seems like it doesn't really make sense. So I mean, anything that I'm investing in now, I'm not really taking like a full position. I'm kind of like putting a little bit on, and then like I'll let it go for a year or whatever, and if everything's still solid and the world gets back to normal, I mean, I can always buy more, but that way, at least if we do have a big pullback, I still have enough cash in my account that I can buy on any pullback, right?
Yeah, I'm sitting in one quarter cash right now. It was 1/3, but then Alibaba and this other company is looking at Xpeng pulled back, so I bought them at a bit of a discount. But I'm still going to be at least a quarter in cash until I feel like we're not going to have a double dip recession, because I've been calling for that for a little while now.
Yeah, I mean, it's anybody's guess, really. It's just like anything like that. I always just try and put, I don't like listening to people, so I'll just do my own research, and if it makes sense to me, then I'll make a decision based on that. But I don't like. That's the thing I noticed too. Like with any kind of trade or any kind of investment or something like that. Like if I don't personally understand it, if somebody tells me, even on just a chart pattern setup, if somebody just says, "Oh yeah, when you see this, you just buy here and then sell here," it's like, okay, great. But like if I don't really understand why, then I'm going to get scared out by the little pullback, and I'm going to get scared out, and I'm going to sell on the first pullback, and then it's going to go another 100%, right? So like for me personally, I always I do so much better if I just make my own decisions and do my own research. Otherwise, I don't have the kind of conviction I need to stay in trades.
Yeah, no, that's the same thing with investing too. Like, if you're asking me about whether or not you want to invest in XYZ company, then you shouldn't invest in XYZ company. You should know so much about them that you could convince me to invest. Yeah, that's where that's my mentality about that.
Yeah, for sure. Right. I agree with that 100%.
Right, you got to tell me like they have strong market dominance, they have great product or services, their balance sheet is incredible. You just give me something. If you just say, well, I want to buy it because other people have been talking about it, then I just want to slap you.
Yeah,
I mean? Like,
and if you do want to do that, just hire your own financial advisor and give them your money and just let them do it for you, right? But if you're trying to learn it yourself and you're doing it like that, that's not a good idea.
No, yeah, I want people to come to me and be able to convince me to buy into something. Like that's when I know you're like you did the homework.
Yeah,
you're solid on it, right?
Yeah.
So like, and it's not like saying like you can't be wrong or I can't be wrong. Just people should just know why they're getting into something.
Yeah.
Right. In that work. And then so like if the stock moves against you, you could probably figure out why it moved against you. So again, you maybe lost some money, but you learned something. That's important.
Right. Yeah, exactly. That's the thing. Like if you don't know, if you don't know why you're in, then if a stock pulls way back, then what's going to stop you from getting scared out and just selling, because you have no idea why you're in the first place.
Right. So actually, I'll give you a perfect example. So the company that I bought into, Xpeng, they're like an EV company out of China. Yeah. And they topped out like at 70 something bucks. They dropped back like almost 50% recently. But in the last like few days, they dropped like 14%. And it's like, if you just looking at this company from the service level, like you don't know why they dropped 14%. Maybe you sell on the way down, or you don't want to buy because you're like thinking maybe they're going to go even lower, right? Mm-hmm. But I know why they dropped 14%. They raised money. Mm-hmm. They issued another 200 something million shares. They raised like $2 billion. And I'm like, that's a good thing. That's a good thing. Now they have runway. Now they can expand their factories and whatever, right? So the shares dropping 14% is a buying opportunity for me.
Right.
There's nothing to be fearful.
It's funny though, because you say that's a good thing. Like, so for me on the day trading side of thing, because that's like people, like anybody that don't know, like that's called an offering. So like if a company wants to raise money, like let's say they have 100 million shares tradable. If they want to raise money, they'll sell another, say they'll sell 50 million shares to the market, which crushes the stock price because it's simple. It's supply and demand. So like if a company, if there's only 100 million and then all of a sudden they're adding another 50 million, then you're creating so much more supply that the price goes down. It's no different than anything. Like, think of like a Honda Civic or something like that versus a Lamborghini. like there's a lot of Honda Civics, so they're a lot cheaper. I know it's obviously a better car if it's a Lamborghini, but that's kind of the idea behind it. But like on the low float stocks that I play, if you see an offering, then that's like everybody just because they know the only reason that type of company is trying to raise money is because they're about to go bankrupt.
Right.
And they're garbage, so you want to short them, right? So that's it's just funny. That's the difference. But if it's a good company and it's reputable, like something like Apple or Amazon or Tesla or whatever, if they have an offering, then it's it's a legitimate business decision and they're trying to keep the company growing. But that will still create a pullback to a certain degree.
Yeah, I'm gonna really touch on that on like the third episode when we go through investing, because this is the kind of stuff that I love. Like the technicals is momentary fun, but for me to dig through the numbers and the nitty gritty of a company, that's what I find the most fun in. And the thing is, I've been investing in Tesla for 8 years, right?
Yeah.
So a lot of people just started hearing about them now in the last few years, and they're seeing the stock price do this. But I'm like, listen, I've held that stock for 8 years. I've experienced personally 350% pullbacks and 635% pullbacks. Yeah. So when I see a 20% pullback, I'm just like, what else is new, right? And I might just be scanning news like just briefly to see what caused it, but whatever. But and I think that's what's important about like really for investing, like to know what it is that you're buying into, so you're not shaken out of those 30, 50% moves.
Yeah,
right.
Sure.
I knew there were good companies since the beginning, and like it was concerning whenever it pulled back 50%, but then I would just read everything I can about it. I'm looking at their financials again. I'm looking at the quarterly reports. I'm looking at their cash flow. I'm looking at everything. If it still looks solid, then I'm like, there's no reason to be selling. It's just news, right?
Yeah. And the thing is too, with Tesla on the day trading side of things, like a lot of guys with bigger bank accounts, like because Tesla, like or Bitcoin, like things like that, every now and again you'll get a big stock like that has really high tradable shares, like a really high float, and all the guys that are day traders will trade that stock because it has these crazy moves, and they can treat it like a low float garbage company because it's reacting the same in that 1 week period or whatever. Right. So if you're seeing these even like Moderna, for example, is a good one like that. Like a couple when they announced the vaccine, it shot, I can't remember what it was. It was like $90 or something, and it shot up to like 170, and then in the one day it went from 170 back down to like 100. So like that little pattern there is like a perfect short pattern on like on a stock that would usually be like 50 cents go up to $2 and then crash back down to 50 cents. Like it's the same pattern, but it's just because there's so many more eyes on it that it reacts the same. So like those little things will happen, but at that point it's just price action. It's just so many people trading it. It has nothing to do with the company itself.
Yeah, I think that's an important thing that we didn't touch on before. Like, it's important that people look at whatever asset they want to trade and look at the trading volume.
Yeah,
because that's incredibly important. Because you've gotten stuck in positions, right? Where it was a good trade, but you couldn't get out.
Yeah, exactly. Because if nobody's trading it, there's nobody to sell your shares to, and then it just keeps going down, and you just keep losing money.
Yeah, so like even most recently, I had somebody recommend me to look at this stock, and it was like moving like this, right? And it was like, oh yeah, you should day trade it because it's highly volatile. But I'm looking at the volume, like 14,000 shares trade hands a day. Like if I'm buying 1,000, I could probably move that fucking market. So it's like, so like if I get a position and it starts going up, I can't get out. I'm gonna ride that thing back down again.
Yeah, exactly.
Right? Which is what you're saying about people who like to trade Tesla or like Bitcoin. The volume is ridiculous. You can exit at any point you want, and there's always somebody on the other side of it to buy it.
Yeah, right? Exactly. So that's why it attracts those kind of guys, and the guys with their really big accounts. They'll day trade that because it is $700 stock, and they got multi-million-dollar accounts, so they can take huge positions, make tons of money. Like on a low float stock, they might only be able to trade 10,000 shares. Well, they can trade the same 10,000 shares on Tesla and make way more money, right? So that's why when those stocks start to move like that, it attracts all those kind of day traders that have the really big accounts, and then they'll artificially move it for a certain period of time until it kind of dies off and just starts doing its thing again.
Right. So I think on that note, we could almost end today's episode because we're getting into a lot of the day trading stuff. So I figured we should save that into the next episode.
Sure.
But I think if there's one or the most important recommendations you could give to somebody that's looking into day trading, what would it be?
I would say rule number one is always, before you enter any trade, know where you're going to cut your losses, because if you don't know where you're going to cut your losses, then you've just opened yourself up to lose all of your money. So before you do anything, like don't ever just buy a stock because it's spiking, because if I've been there. If you buy a stock and it's spiking and you just buy it, it could just snap back down 20%. And then what do? Do you just panic and hold and then it goes down 50%? Or, it's just, that's the hands down the number one rule is know exactly how much money you're going to sell and know where you're going to sell and stick to that number. Because if you don't, that's just a slippery slope to going bankrupt.
Right. And I think if I could just leave the viewers with anything, it's just that's important. It's to identify whether or not you want to be a trader or an investor. Because anything you figure out from this point on, you're just going to get confused if you don't know which one you want to be. Mm-hmm. Right? Because there are two complete different paths. And so I figure out which one you want to be. And hopefully the next 2 episodes, we're going to help the viewers figure that out, because the next episode, you're going to be touching on the day trading section. And then the 3rd episode, I'll be touching on the investing section.
Right.
So ideally by episode 3, you'll be like, oh, I'm either one or the other. Yeah.
Yeah. You can always experiment with both and see which one you like anyways.
I'm a focused guy. I hope that they would try to do one or the other before experimenting with both. Or maybe they should experiment with both at the beginning just to see which, because if you don't know what your personality is, I guess that makes sense.
Yeah. Yeah, absolutely.
Play around with.
Yeah, you gotta try a little bit of everything and then just kind of focus your attention where your attention gets drawn.
Cool. Very cool.
All right, man.
All right. Thanks, Galen.
All right. It's been a pleasure.
Yep. So we'll talk episode 2. We're going to be talking about day trading. So anybody that's interested in that, tune in for that one.